My dear students, today we shall discuss the MCQ questions of Financial Accounting CMA Intermediate today exam. Section A. Choose the correct option from the four alternative given. Which of the following statement is correct? There are four answers given. The financial accounts of an enterprise are treated as evidence in the court of law. Actually, the financial accounts of an enterprise are treated, will be accepted as evidence in the court of law. It is true, 100% true. And then question B answer. Financial statements prepared by two different accountants will always show identical results. Actually, it may be some different results may be there. So, it may be wrong. The financial statements need not take into consideration any statutory requirements. No. It should take into consideration statutory requirements. That is also wrong, incorrect. Only credit transactions are recorded in the cash books of accounts. Actually, in the books of accounts, both cash and credit transaction must be recorded. So, this is also incorrect. So, the exact answer is the financial accounts of an enterprises are treated as an evidence in the court of law. So, A is the correct answer in the court of law. So, this is the correct answer. Please make note of it. And then question number 2. When the closing stock is shown in the trial balance, then at the end of the accounting year, the closing entry for it will be required. Normally, the closing stock will be given in the adjustment column. If it is given, so then only we have to pass one journal entry, that is closing stock account debit to trading account. It will appear in two sides. But if it is mentioned in the trial balance itself, entry is not required. That is the correct answer. So, D is the correct answer. Please make note of it. D is the correct answer. Entry not required. State which of the following transactions can be classified as a foreign currency transaction. Foreign currency transaction means we are purchasing or selling in foreign currency. That is a foreign currency transaction. What is given in the answer? Buying or selling the goods or services priced in foreign currency. That is correct. Lending or borrowing when the amount are denominated in a foreign currency. That is also correct. Acquisition or disposition of the fixed asset denominated in a foreign currency, that is also correct. So, answer D, all of the above is the correct answer. Please make note of it. All of the above, that is the correct answer. And then, which of the following is not an accounting convention? First of all, we should know convention. Convention means that is rules like disclosure, conservatism, materiality, etc. So, the disclosure, conservatism, materiality, that is a convention. Actually, which of the following is not convention, accounting convention? Business entity is the correct answer, because business entity is a accounting concept, but it is not a convention. So, business entity is the correct answer. Please make note of it. Business entity is the correct answer. And then following information is given in the trial balance of Rupa dresses as on 31st March 2025. Actually, whatever is given in the trial balance, that is already accounted for. There is no need of any adjustment. If anything to be adjusted, it must be given in the adjustment column. So, it is a trial balance. In trial balance consists of bad debts. Trial balance consists of provision for bad and doubtful debts as on 1/4/2024. That means opening provision. This is called opening provision. And then this is bad debts. It is already written off, so that it is given in the trial balance. And then debtor balance is 2 lakhs. So, further bad debts only is given in the adjustment column. So, what we have to do actually, we have to take into account, that is debtors, that is how much? 2 lakhs. So, from this we have to deduct only further bad debt, less further bad debts, that is how much? 1800 rupees we have to deduct. So, 2 lakh minus 1800, that is 1,98,200, 1,98,200. So, on which we have to provide, that is 5% provision for bad debts. So provision for bad debts, we have to provide for the current year 5% on this balance, that is 1,98,200 into 5%, that is 9,910. So the provision for bad debts, how much? 9,910. So it is to be entered in the balance sheet. It has to be deducted. After that, in the profit and loss account, if there is any opening provision, it has to be deducted. But in the balance sheet, what is asked in the question, if the further bad debt is 1,800, we had already adjusted. Rupa makes a provision for the 5%, that is 9,910. The amount of such provision to shown in the balance sheet as at the end of the 31st March will be, that is 9,910. That is a correct answer actually. And then in profit and loss account, there is a formula: new bad debts plus old bad debts plus new provision minus opening provision. So it is not appearing here in the balance sheet, only 9,910. That is a correct answer. Please make note of it, 9,910. And then question number 6. If the capital at the end of the year is rupees 80,000, capital introduced during the year 60,000, drawings for the year are 40,000, loss for the year 1,20,000, then capital at the beginning, actually statement of profit and loss account, I mean in the case of incomplete records, there is a formula, that is a closing capital. How much closing capital? Closing capital from which we have to start, that is 80,000 rupees closing capital. Add drawings. How much drawings? Actually drawings during the year, that is 40,000. That is 40,000. We have to add 40,000. If we add, that is 1,20,000 rupees. 1,20,000 rupees. So less, is there any capital introduced during the year? So capital introduced during the year, how much capital introduced? 60,000 rupees. Capital introduced 60,000 rupees, that also to be deducted. So 60,000 you have to deduct, the remaining balance 60,000. Normally from this we have to deduct opening capital, but we don't know, it is not given opening capital. That one we have to find out. So less opening capital we have to find out, we have to balance it. But after opening capital deducted, there is a loss. How much it is given? That is 1,20,000 rupees. So loss should be 1,20,000, but after that, I mean adjusted capital, that is 60,000. What should be the opening capital? That is 1,20,000 plus 60,000. That means 1,80,000 should be the opening capital. That means adjusted capital 60,000 minus opening capital, then loss is 1,20,000. It is correct. Loss is given 1,20,000. So opening capital should be 1,80,000. That is a correct answer. A is the correct answer. Please make note of it. A is the correct answer. And then state which of the following is true. What is true actually? Joint venture is a temporary partnership. It has a particular certain period, that is a definite period. That is correct. So answer, which of the following is true? Joint venture has a definite life, is a true. Financial statements are not comparable. It is not true. Sales book is a part of ledger. Sales book, it is a subsidiary book. It is not a part of ledger. Sales account is a part of ledger. Ownership equity equal to asset plus liability. It is wrong. So asset equal to equity plus liability. That is a correct. So here, out of the 4 answer, which is true? That is A is true. I mean 7th one, joint venture has a definite life. So 7th one is the correct answer. Please make note of it. And then question number 8. On 1st January 2025, goods costing rupees 1,32,000. That is cost price is 1,32,000. Okay. What is the margin? I mean profit margin. So it is consigned, actually it is consigned by Mr. Rana of Chennai to his agent, to Dana. So consignee is Dana, consigner is Rana. So in a pro forma invoice, that is 20% above cost. So profit margin means 20% above cost. That means 1,30,000 invoice price, what should be? 1,32,000 into 120%. So 1,58,400. 1,58,000, that is a invoice price. So invoice price 1,58,400. So out of that, Rana paid freight charges. Make note of it, freight charges. The consignee was paid rupees 2,000 per annum towards establishment cost, and Dana paid rupees 1,000 as a godown rent. So whatever the amount paid by the consignee paid establishment cost and then godown rent, like that. So out of that, 3/4 of the goods sold. So total invoice value sent on consignment, that is 1,58,000. On that, it is 3/4 is sold. That means, what is 3/4? So 1,58,000 divided by 4 into 3, that is sold is 1,18,800. So remaining 1/4 is unsold, that is stock. So 1,58,000 divided by, into 1 by 4, that is 39,600 rupees stock. So the stock value 39,600, but the consignor spent some expenditure. How much expenditure? Actually, he paid freight expenses 4,000 rupees for total goods. For 1/4 of goods of stock, how much? So 4,000 divided by 4, that is 1,000 should be added. So if you added the cost of unsold stock, consignment stock, that is 40,600 rupees. That is 40,600 rupees is the correct answer. Make note of it. Answer 8 is the correct answer. 8 D is the correct answer. 40,600. 40,600 is the correct answer. And then Reka draws bill of exchange on Reba, rupees 20,000 payable in 3 months. Actually, the bill is to be payable on 3 months. On the due date, Reba could not make the payment, and Reba got it notified from noting charges. Notary public. Noting charges are nothing but that is a charge by notary public in case of dishonor of the check. Reba required Reka to draw a fresh bill for another 3 months, that is 12%. Actually, noting charges will be given. Normally, it is paid by the bank. Later, it has to be collected from the drawee. Now, the bill amount is 20,000 rupees. So, bill amount 20,000 rupees, but he is not in a position. Reba is not in a position to pay the money at the due date, but he is ready to for new bill. He is ready to pay new bill at 12% interest for 3 months. So, into 12%, 12 by 100 into 3 by 12. That is for 12 months. How much? 20,000 into 12% divided by 20,000 into 12% divided by 12 into 3, that is 600 rupees. So 600 rupees is a interest. So including interest, he is ready to pay the bill. So the previous bill amount 20,000, interest is 600. So 20,600 will be the correct answer. If it is included, noting charges also included in the bill, that is at the time 20,700 is the correct answer. So here if it is paid separately, noting charges, so 20,600 is the correct answer. Please make note of it. 20,600 is the correct answer. And then state which of the following statement is not true relating to accounting standard 10. Actually, question 10. Actually, accounting standard 10 excludes the accounting for real estate developer. Actually, in the question asked, what is not true according to section, accounting standard 10. Excludes accounting for real estates for developers. Actually, it is true. And then recognize the revaluation of fixed assets. It is also true. Does not deal with the jointly owned asset. That is true. But which is not true? It is asked in the question. So, no recognition criteria for fixed assets are laid out. That is a correct answer. So, B is the correct answer. Make note of it. B is a correct answer. And then B and C entered in a joint venture. B and C entered in a joint venture. Question number. For export of Indian handicraft goods to overseas customers, B sends goods worth rupees 2 lakhs to C for exports to the USA. C exports goods worth rupees 1 lakh 45,000 for rupees 1 lakh 10,000 rupees. Actually, the cost price 1 lakh 75,000. Actually, he sold 2 lakh 10,000. So, profit margin, how much it should be? Gross profit 2 lakh 10,000 minus 1 lakh 75,000, that is 35,000. So, what is the GP profit? I mean gross profit ratio. So, 35,000 profit divided by cost, how much? That is 2 lakh, I mean 1 lakh 75,000, because out into 100%. So, 35,000 divided by 1 lakh 75,000 into 100, that is 20% is the profit margin. What is asked in the question? So, B sends goods 2 lakhs. Out of that, to the extent of 1 lakh 75,000, he has sold. So, remaining stock 25,000. I mean 2 lakhs minus 1 lakh 75. 1 lakh 75,000 is sold. Here it is sold. So, remaining 25,000. So, the remaining stock at the same gross profit margin, he agreed to take. See, agreed to take at gross profit margin how much? 20%. So, plus 20% margin. So, 25,000 plus 25% margin. I mean 25,000 into 25%, that is, I mean how much? I mean 20%. 25,000 into 20%, that is 5,000. So, plus 5,000. So, plus 5,000. So, that is 30,000. So, 30,000 is the correct answer. 6, answer B is the correct answer. Please make note of it. Answer B is a correct answer. So, next, I mean 12th question. State which of the following statement is true. 12th. The buyer gets immediate possession but not ownership under installment payment system on signing the contract. Actually, which of the following is true? That is asked. Actually, this is true. Buyer gets immediate possession. Actually, hire purchase or installment, you will get the possession immediately. You can use the product. But it is not the ownership. Ownership will be passed only at the time of the last installment paid. So, this is true. Correct. And then B, a marine insurance policy is taken to cover the claim for loss. Yes, it is a insurance policy for loss. That is also correct. For independent branch, the incorporation of branch trial balance is required. That is also correct. Short term lease, which is often cancelable, is known as actually that is leverage lease. That is false. So, out of 3, but in the question asked which one is true? There are 3 truths. But most correct is A. The buyer gets immediate possession but not ownership under installment system on signing a contract. So, A is the correct answer. Most correct answer. Please make note of it. This is the correct answer. So, A is the correct answer. And then 13. Assertion A and reason B. Goodwill is a tangible asset but not a fictitious asset. Goodwill, actually it is a tangible asset. We cannot see it, we cannot touch it. But it is not a fictitious asset. Correct. And then reason. Goodwill does not have any physical existence. That is also correct. But fictitious assets are not realizable. That is also correct. Whereas goodwill can be purchased or sold. Even though the goodwill is intangible, we can purchase it, we can sell it, we can value it. So, that is also correct. So, choose the correct option. Both assets and reason are not correct. That is not wrong. That is not the answer. Reason is correct, but assets is not correct. Assets and reason both are correct, and reason is correct. So, answer D. Actually, I mean what shall I say? Answer D. Assets and reason both are correct. And reason is the correct explanation of assertion. That is the correct answer. Please make note of it. D is the correct answer. D is the correct answer. And then D, E, F are partners in a firm sharing profits in the ratio 1:1:1. They decided to share the profits to 2:3:5. the goodwill of the firm is valued at. First, you have to consider what is actually, old ratio, DEF. Actually, the old ratio is 1:1:1. So, 1 by 3, 1 by 3, 1 by 3. So, new ratio is 2:3:5. That is 2 by 10, 3 by 10, 5 by 10. If you add 5 by 10. So, 2 by 10, 3 by 10, 5 by 10. So, he is asking the goodwill of the firm valued at 1,60,000. F's capital account, they are asking for only capital account. Whether there is a sacrificing ratio or gaining ratio for F, we have to find out. So, new minus old. For F, we will consider for F only. New minus old, new ratio 5 by 10, old ratio 1 by 3. So, 10 into 3, that is LCM 30. So, 10, 30, 3 times 3 into 5, 15, minus 3, 10 out of 30, 10 times, so 10. So, 5 by 30, that means 1 by 6. So, 1 by 6 is a share. Actually, he is gaining. Actually, out of this transaction, actually F is gaining. So, he has to bring, what is the goodwill value? 1,80,000. So, 1,80,000 out of that, F's value, that is 1,06,000, into 1 by 6, that is 30,000. So, he has to bring in the ratio, we shall find out sacrificing ratio of D and E. Actually, the ratio will be, journal entry will be F's capital account debit to D's capital account to E's capital account. That is a correct entry. But here only asked F's capital account will be debited or credited. Actually, F's capital account will be debited for rupees 30,000 is a correct answer. So, that's enough. So, debited by 30,000 is a correct answer. Please make note of it. And then Ranbir. Ranbir is admitted into the partnership for 1/4 share of the profits. The total capital of the old partners should, that is 45,000. Old partners means there may be 2 or 3 partners, whatever it may be. So, it is not stated in the question. So, old partners may be 2 partners, 45,000. But after adjustment of goodwill and revaluation of fixed assets and liabilities and transfer of assets, here actually Ranbir is given 1/4 share of profit. So, how much capital he should bring in? For 1/4 share. So, total capital should be how much? 45,000. So, what should be his share? That is 1 by 4. So, 45,000 divided by 4, 1 by 4, that is 11,250. So, he has to bring in. So, according to the, the total capital, if the total capital stood at 45,000, but his share of capital, Ranbir's capital should be 11,050. Okay. And then, if Ranbir brings 20,000 as capital for 1/4 share, if he is bringing only 20,000, what should be the total capital? Already there was the existing capital of the old partners, that is 45,000. Now he is bringing 20,000. So, total should be 65,000. So, 65,000. So, at this time, what should be the total capital of the firm? So, we hope this is the correct answer. It may be different. If, we shall wait which answer will be selected by the board. We will see later. So, the answer will be 11,250. Actually, this amount of the capital, in the first case, what amount should be brought in by the new partner? That is 11,250. If Ranbir brings 20,000, previously there was 45,000, so it should be, total capital should be 65,000. 45 plus 20,000, 60. So, this is a correct answer, I feel. So, make note of it. B is a correct answer. So, make note of it. That's all.